Hey everybody, great to be back with you and happy Friday to each of you. Mike Fairborn here for our ThinkScript class. Hope you're having a good day. Good day in the markets, folks. There is some volatility out there, but guess what? That is our topic of discussion again today. Looking past that volatility, we've been talking about compression, volatility compression from time to time. Now we're going to start talking about the expansion, a whole different sort of development or understanding of it, but actually seeing it as the potentially the moves within a given stock are just barely starting to happen after potentially an extended expansion period. So I'm really looking forward to diving into that with you today with a new Think script. I also wanted to talk about a couple of loose ends, a couple of comments that we had, topic requests, and breaking that down a little bit more in detail for you. But yeah, looking forward to diving into that. Hello to you, John, David, Joe, Life of the Fast Lane, as well as Mighty Mouse. We've got JB in the chat. Good friend of mine, JB. James Boyd. And folks, you can follow us both on X. Mike Fairborn CS, James Boyd CS. There is my handle right there. If you are, in fact, interested in doing such, love to have you on board. All right, folks. Well, excited to get into this and yeah, dive into a different aspect that you probably haven't seen yet before. Totally different approach. And so with that, let's go ahead and take a look at our disclosures to get going here. Information here is for general information purposes only and should not be considered an individualized recommendation or endorsement of any particular security chart pattern or investment strategy. The paper money software application is for educational purposes only. Backtesting results presented are hypothetical and there's no guarantee that the same strategy implemented today would produce similar results. Investing does involve risk, including the loss of principal. And also, past performance of any security or strategy does not guarantee future results or success. Now, we are going to talk about one of the scripts we're going to be looking at is a dividend yield stock. So I'm just going to bring this up right now. I might bring it up again later. But anytime we're talking about dividends, there's always a risk also of dividends being cut or removed completely from a company. Okay, so with that, let's get going here. And let's take a look at the S&P 500 index, folks. My guess is you've probably seen plenty of discussions on the S&P 500 index, not just today, but probably all week. But I'm going to pause just for a minute and just kind of highlight this range that I've been talking about for a little bit here, that 5660 on the S&P 500 index. Watching this, been watching it pretty closely for the past couple of weeks, tying that in a little bit to the 200-day moving average, which can be very, very helpful. Because a lot of times, traders, investors, institutions are looking at this moving average for indications. If we are above it, bullish. If we are below it, bearish. You'll see how close we are to that 200-day moving average right there. Now, with prices coming down recently, there might be an expectation that that 200-day moving average too might start to just kind of taper off a little bit, maybe flatten out or even dip a little bit, kind of highlighting the importance that there could be some key resistance here. The reason why I bring this up, that possibility of dual resistance being quite close, is because within this Think script class, a lot of times we are looking, with whatever script we're focusing on, we're looking at, hey, is strength possibly going to be the upside or the downside? I'm just bringing this up because we might be at an interesting pivot level in the market, whereas if we break down, it may in fact look a lot like the possibility of a bear flag, namely this area right through here, with a sharp move to the downside, weakness to the upside. Will we stall out at resistance or double resistance? Perhaps we could, right? That's the question, right? Or will we break above it? And by the way, we have a very long and extended upward trend here that could resume to the upside. And by the way, we had done that previously right there. See that big dip? That was kind of a sideways to a larger decline down that did also go through the 200-day moving average, but we were able to get back up above it fairly quickly. So will this scenario unfold over here, or will the bear flag scenario unfold? That's something we could be looking at and kind of tailoring the kind of think scripts that we might be looking at too. We're looking more bullish or bearish. Well, a lot of times market direction can be quite helpful, in that regard. So I wanted to bring that point up. All right. Well, hello to you, Thea. We've got, let's see, Elite, I believe, as well as Will. Howdy. All right. Well, let's do this. I wanted to cover some of the topic requests that we've been getting recently. There was a follow-up we had about a particular candlestick pattern Uh, Last week we talked about using the scan tab, as you recall. I'm just going to highlight where this can be found. In fact, I'm going to take this off. We'll just look at the S&P 500 here completely. But let's hit that before we get into our actual volatility expansion thing script here as we dive into that. But real quick, just to cover our bases here, I'm going to go ahead and I've clicked on study up top. So I've added a study into the scan tab. Okay, within that scan tab, I am now, very important to note, we're in the stock hacker here. So key tab, scan, subtab stock hacker. Down below, what I'm going to do is click on my little pen, and we'll dive into this like we talked about last week. We went into pretty good detail on some of the condition wizards. We talked specifically about 5 gems is what we highlighted, and be sure and take a look at that class if you're interested in using the condition wizard, especially if you're just getting used to using the Thinkorswim platform. It can be very, very helpful to do. All right, but that's where we're at right now. Just a quick reminder on that. Anytime you're looking for a candlestick pattern, let's say within the S&P 500, go into the study, like I just shown there. So select a condition, study. In this case, we talked about, say, for example, a morning star. And what we could do is we could say a morning star is true. In other words, the condition was met within the last, let's say, 10 bars. Okay, this is one of the more sort of advanced candlestick patterns. It's a confluence of candlestick patterns. It takes 3 bars to make the candlestick, or I should say 3 candlesticks to make the candlestick pattern. But this is it right here. If I save this, Morningstar is true within 10 bars. I'm going to click OK. Across the S&P 500, folks, it is that literally that simple to do. That's it. That's all you got to do. And you can scan this across. I went over the past 10 days. We have nothing over 10 days. Let's change this real quick, because last time we did it, I think we had like 3 last week, but we're not even within the past 10 bars. So I'm going to go back here and edit this. I'm going to change this from a morning star into, where are you? Oh, let's go study, and we'll just go ahead and just highlight here. Let's see. Let's go with a bullish. Or there it is, and just engulfing, an engulfing pattern. Okay, we'll just call it engulfing, and we'll go ahead and say the last 5 bars here. Click save, click OK, and we'll run this. There's 25. Let's go ahead and show you Apple right now, because it does meet that criteria. Let's go back into a 1-year chart so you can see it a little bit better, or even a 6 AAPL. That's what I was supposed to type in. AAPL. There we go. So is it engulfing? It is engulfing. Can you see it today? Today's candle is engulfing the prior day's candle, and that could be a bullish engulfing pattern. And all else equal, technicians will look at this as a positive sign. Doesn't mean it's going to go up, but it can help to potentially influence what their expectations are about a move to the upside. And many traders, investors will look at, hey, there are a set of probabilities they might be using that could influence it, at least for an expectation of the upside. And that's interesting too. We could look at something like that on the market. The question that came up was also on a candlestick pattern referred to as a tweezer bottom or a tweezer top, which looks like this. It's kind of a famous candlestick pattern. It's what you're basically getting is something like a double doji on top, or down below, a tweezer bottom would be like a double doji, or something very, very close to that happening at the low. And a lot of traders really look for that kind of pattern as a potential upside reversal, question mark. Okay, but that's one we're going to have to develop, and that's something I can start looking into next week for you. If you have any other candlesticks that you might be interested in that aren't here, that's something I could try to work on as well. Okay, so that could be of interest to you. Quick note while we're on it, if I jump up here into just YouTube, I wanted to highlight here our channel very quickly. Up top here, we've got Trader Talks channel. Well, if you go here, encourage you to subscribe. We have our playlist listed here. If you want to start, if you are new and getting into the Condition Wizard, last week's class could be quite helpful for you. I'm going to go ahead and just pull this up right now. There's the Think script. Let's post this in here so you can see this. And this is the playlist that you can pull up. But it was just last week. that we discussed this. There were some questions that came up on it, but that can kind of help jumpstart getting you into using the condition wizard and ultimately into some of the coding that is provided. I'll go ahead and throw that into the chat right now so you've got it. And there you go. All right, well, let's do this. I'm going to get started now into one other quick item to review. You guys remember this? In fact, I can use Apple while we're on it, but do you recall this historical yield? I've, adapted this, updated it a little bit here. I want to show you what we've got here and see if it might be of interest to you. Remember what the yield does? Again, we're talking about dividend-paying stocks, and you can see that listed down below. Apple, believe it or not, does pay dividend. I think many of you probably did know that. It is a little bit surprising when some of these companies, I think Meta just started to pay a dividend as well. Again, just to note on dividends, they're not guaranteed to continue, being paid into the future. But a quick note over here is that I've put some different colors in here so you can see it. And I've made what I think to be somewhat of an interesting addition to it. And that's this right here. There's a moving average on the yield. And remember what the yield does? We talked about this a while ago, but I've adjusted it a little bit, updated it. The yield gives us a sense of where the historical yield has been, and specifically for potentially dividend-paying stocks, namely dividend-paying stocks. But if we look at that, let's just say Coca-Cola. That's a dividend-paying stock right there. It can be helpful to kind of spot those areas where the yield has been low for a period of time. And I've got this represented right now as the top 20% and the bottom 20% of the yield itself. And a lot of times what happens, especially with these companies that are like dividend aristocrats, they've made dividend payments and increased those each and every year for at least 25 plus years. I believe Coca-Cola is over 50 years of doing that each and every year without missing a single year. But we're looking at the high levels and the low levels, and that can help us spot something very interesting. And that is this: when dividend aristocrats are those companies that specifically are prone to pay consistent or higher dividends in the past, and like I said, they might continue to do that in the future. Right now, it's at about a 3% dividend yield. Notice this level up top here, and notice this level up top over here. Just as a quick note, sometimes this is where dividend or income-minded investors will tend to pick up a particular company. And they might find that at these ranges, and all these companies are a little bit different. Some, you'll see it hit about 5%, and a lot of times the stocks will tend to bottom because income investors are saying, when this stock normally hits a yield of 5%, I might be interested in getting into it. So that's one thing that I've noted in here. That's what this can be helpful with. I put some additional tabs in here. This was originally built by another coach, and I've noted that within the script itself. But then I also put in here a moving average, so you can see if prices are above or below that moving average. That could be helpful too. A quick note: anytime you are starting to break below, let's say, for example, a longer term moving average like this, you're breaking below that. This happens to be a 50-period moving average. The yield might be compressing and inversely giving an income, I should say, an income signal that prices might be going higher. Okay? Right over here too. You began to break below there. Maybe an early warning sign, especially if you're seeing a setup over here. So it's using income as a way to view an income type stock or a dividend paying stock, a stock that's currently paying dividends. Now, the addition I made to this is up top here. Just click on the wheel. You can go, I'm sorry. Yeah, my apologies. It's not that wheel. It's the wheel. Click on the actual dropper icon and then go into this wheel right here. And what you can do is I've made some additions in here so you can adjust the percent overbought and oversold ranges with these quick adjustments. If you want to see the top 10% or bottom 10% of where the yield has been, you can adjust this. I just use 20 here as a rough guide. You can also adjust the moving average as well. Okay, you got a show labels box as well up there, but I want to plug this in here so you can see this and make quick adjustments to it. It is a way for those of you that do look at income. Let me go ahead and just share this with you into the chat right now. Again, the ThinkScripts are not guaranteed for timeliness or accuracy, and I've actually got to type that into the chat as well. Not sure if James is able to. If not, I could certainly do it. But let me just go ahead and share that with you so you've got it here. And we'll share it, put it into the chat right here. Okay, there you have it. I should probably just note this. Yield, historical yield. Okay, so there it is. And I'll go ahead and type that in right now. So scripts not guaranteed for timeliness, accuracy. Okay, accuracy. Okay, and so as long as the data that's being plugged into the platform is accurate, well, then it mathematically should show it correctly. I think we have really good data, but I just wanted to note that just so that you're aware of that. Okay. All right, so there you go. There is that script. Now, let's shift gears again and get into our core discussion here. All right, but just a couple of follow-up questions that we had there that I wanted to address and tell you what we've been developing. In fact, that's something I'll do within this class specifically as we go through it. All right, so let's do this. So getting back into a script that we had a while ago that we talked about, which was over here. Let's see, neither of these two or three. Let's take these off right now. Let's just adjust these out. Remove, and remove. There we go. And as you recall, we did the TTM squeeze in here with the number of bars. And this was interesting because we talked about it, because what it does is it gives us that TTM squeeze when the Bollinger Band fits inside the Keltner channel, right? And it tends to, let's go ahead. This is on the, okay, NASDAQ 100. So it will statistically give us a measure of, how long the Bollinger Band has been within that Keltner channel. One, a statistical measure based on standard deviations, that would be the Bollinger Band, and the other one is based on ATRs, the average true range, with the Keltner channel, and you're getting a statistical measure of a tightening range. Now, say for example, let's use one of these right here, and I'll pull it up. Okay, what can we do? We could do any of these. Let's see, some of these have been in for a little while though. Generally what traders are looking for, I'll pull up ZS. Okay, Zscaler. Haven't looked at it. We'll pull it up right now though. Here is ZS. Let me take that script off down below. It does not pay dividends. We're not looking at it from that perspective. And what I want to do right now is add in the TTM squeeze. And what we'll do is we will make some adjustments to it. I'm going to take off the histogram and just leave on the little dots to let us know that we've been into a squeeze. Okay, so this is a tightening of the range. And so if we're looking back over an extended period of time, you've got the Bollinger Bands fitting in, the Keltner channel, and when it gets red down here, it means that we could be on the verge of a potential run, possibly, because the theory is if prices begin to coil tighter than they have done historically, then you may begin to, I'm going to try to line this up the best I can, you may be on the verge of a breakout. And when that happens, what traders will look for is it can begin to foretell, maybe in the direction of the trend they're looking at too, an upward move or a downward move, but a move outside of this range and potentially a larger move regardless of direction. Like I said, it might be in the direction of the trend. You can see some support over here, just doing this on the fly, with Zscaler, right? We're getting another one coming in here, another level. Will it make another run and possibly try to break through resistance? That's the question. But we can tell you right now, based upon two key indicators that look for volatility changes that is beginning to tighten up. Now, one of the issues with this is, and by the way, here's a very interesting one right here as well. Volatility expansion occurred right there, and a lot of times it began right there, but it stopped just ahead of earnings, and something started to kind of change there. So some traders will look at this. Well, if it starts to move up, if it gets a close above the high to low day or whatever indication it might have here, they might be looking for a move to come up because volatility is expanding there, right? Volatility is expanding. I want to put this on because I'm afraid people don't know, they might not have seen this before. So let me just quickly show you the Bollinger Band at a 20. That's the default, because that's what the indicator's default is as well. Here's the Keltner. I'm going to highlight it so you can see exactly what's going on here. Okay, so do you see us in this range over here? The Bollinger Bands are in, let's say, a purple and a red, and you can see how they have come in between. Not only are they tightening, and not only are the Keltner channels tightening, we're getting one additional statistical indication of low volatility. And that's when it trades within those Keltner channels, and that's what's causing these red lines to appear. So you're getting a squeeze, but then we'll only know because the Bollinger Band will start to break outside of those channels, and then that squeeze will end, and that can foretell minds of some traders. They're thinking that's the move. Let's look at a couple more over here. I'm just going to highlight this. I'll take these off for now, but I wanted to just show you what's creating that squeeze. So not only is it a Keltner channel squeeze and a Bollinger Band, but it's even more extreme than that. The Bollinger Band inside the Keltner channel. We had BIIB was one I just noticed. Okay, really off the bottom here, and we're back into a tight range. Now, what's interesting is when you started to see some of this activity, oh yeah, see up top here? You get a breakdown, and then it comes down again and again. What you're seeing is when you start to get some of these Keltner channel, or the TTM squeeze coming in, notice we've been kind of flattening out through here. Do you see the possibility? We don't know if this is going to happen or not. Shoulder, head, shoulder, inverted head and shoulders pattern. I'm not seeing that anywhere through any of this range. Nowhere. It's nowhere there. It's only coming in down here. It happens to be around volatility, and we've looked at this before, and that can be somewhat interesting to kind of take a look at. Will it bounce here? You might want to have eyes on it, right? You might want to. Healthcare is one of those that could be of interest. You might have alerts put on the chart, whatever the case might be, to kind of track something like this. Now, one of the things that traders will look for is they're looking at least at 3 days in the squeeze. Not so much a 2-day, a 1-day or a 2-day, but a 3-day or more. So 3+ days in the squeeze, with the possibility then of an expansion of volatility afterwards, up or down. It could be either way. I just wanted to highlight that in this whole downward move that we saw all through, pretty much all through, well, not all through last year, but a good chunk of last year, now we're getting a potential bottom, and those squeezes are there. You'll find that a lot of times around rounded bottoms or when the trend started to shift, and it's a great way to spot it. That class we did is also in that playlist if you want to check that out. I threw that link in there earlier. This one right here, because we did that too. That'll get you caught up on it if you wanted to take a look at it. It will be there. And here we go. Okay. Now, yeah, so there are some people are typing in. Yeah, there are some sort of, how can I say this? There are some different sorts of trades that investors might want to put around different price patterns as well, that you can be creative and think, okay, what might be happening here, and what sort of a trade potential could I put on? That's just, whatever stock you're looking at, that would be the next step, is right. Is it going to be a valid something that I could look to possibly investigate further, pay per trade. See how it goes, right? So that's a big consideration. All right. So Paul brought this to my attention a while back, and I would have had this posted, this new script posted earlier, but by golly, there was a lot of conditions, and it took me like a week and a half plus just to get the script working. And that's this. I wanted to take us now into a different area, which I think could be even more valuable because sometimes these pause for a long time. But I wanted to do this, and this is how this next script is going to work. Once you have 3+ days of the squeeze, okay, so you're getting that tightening of price for 3 days, then within the last 3 days, you have broken out of that squeeze. In other words, you are starting to see a statistical expansion occur one way or the other. Now that could be based upon a different pattern, but the thing is I wanted to put it in this sense. So it has to be 3+ days of the squeeze, and then it's got to be in the last 3 days that we get notified. In other words, we don't want it to do something like this. We don't want to come down here and say, okay, so it breaks up. It's 1, 2, 3, 4, 5, 6 days. There comes a stage where it becomes a little bit redundant, right? It's like, oh, the move's already done. So keeping it within 3 days can be helpful because sometimes you'll get the spike and then it will still consolidate a little bit, and there's still time to maybe look and see if there's anything that still interests you with that trade. So that's kind of like the sort of the brainchild behind this. And let's go ahead and get into it right now. Created it as a market watch. I'm going to set it up next to our squeeze bars. Okay, so we'll go over here. And you guys know that there's a set number of these that you can pull up. Obviously, you have in here, but I've got a title in here, The Squeeze Reloaded. Anybody ever see The Matrix? Remember what the second Matrix was, the movie? It was The Reloaded. So I just figured, hey, why not put in The Squeeze Reloaded in here? Oh, and it's not. Oh, shoot. Okay, I've got to change the. Okay, what we're going to see is the zeros are in black. I was using on a white background, but those can be easily flipped. I'm going to show you how to do that as we look at the conditions here in just a second. The good news is I've got green. All I got to do is highlight the green and we'll find it here. Is it still loading? It might be still loading. Hold up. Oh, in the NASDAQ 100. Okay. So hold on a second. We're not seeing anything that's popped out of it. Let's go with the S&P 500. There's one. So T-Mobile over the last 1 day. Shoot. We'll just do this one while we're waiting. Okay. So there's T-Mobile. It should put it at the very top or bottom if I clicked on it a second time. Okay. I have this lined up. I don't know what's going on, but it had T-Mobile on here. Is it not showing T-Mobile now? Okay. T-Mobile popped off. I have no idea why. I'm going to go back. There it is. It had to reload. So T-Mobile is there. Let's pull it up right now and see that T-Mobile. It should have just come out of a squeeze. I think it's popping in and popping out as we're talking about is what's happening. Let's choose a bigger group. There's an alert on it right there. Okay, so I got the alert. So it's going in and out. Did you see it? Oops. It's going in and it's going out. We're very, very close to it. But I just noticed that. We got a little notification as well of it too. So your computer can make a sound or it can be texted to you. But here you go over here. It's just barely coming out of a range. Now, what's interesting about this on T-Mobile, because once you get the signal, is you can look over here and say, what else are you saying on this chart? How about a strong upward move, consolidation, and a move back up? Doesn't look a lot like the S&P 500 to me. This has been consolidating very, very well, actually. And so we'll see, is it ready now for the possibility of a flag pattern? But it's here to spot a possible, let's say a possible paper trade here for you, like a flag pattern. But also with an indication that that volatility might start to work in your favor too. In other words, if it comes out of that, then the magnitude of the move, using a totally different metric here, could also work in the favor of our what we perceive to be a bull flag setup. And that could be, I mean, if you're looking at a retracement of the flag, it could be up here. So what we're doing is we're really tying in volatility and saying, let me know now that it started to move, as opposed to having to watch it each and every day for this move to occur. Okay, so it's just another way to maybe improve the timing a little bit, but also to find patterns that could be on the verge of breaking. So that's one right there. Let's go to the Market Watch tab. I'm going to pull up the S&P 500, and I might need to, let's see, if we go, yeah, so it's not showing white. That's okay. I can flip this before I share it. I know many of you use the white, the black background, but this is how I have it set up. So I'll let it load up, and I'll do it one more time. There you go. What it's going to do, it's going to list these all in order from the top on down. So you've got the 3 days. You might want to take a look at those first. Man, I'm getting all these notifications. 3 days, 2 days, or 1 day. So these down here just flipped off today. So volatility could be expanding right now. These were like 2 days ago. And then over here, 3 days ago. Like I said, I went to that far. Look at that. You got your little snowman right there. Your volatility snowman. Okay, but look at this. So let's pull up some of these. What's this DTE right here? It just broke out, and we know it had to be in a compression period for at least 3 bars. So DTE. Okay, so there it is. There are your 4 bars. Let's zoom in on it. Ooh, that was an interesting one right there. That could have been of interest because it would have pulled it up over here too, right there. Okay, do you find that interesting? When that volatility shifts, you're getting potentially an early indication that that direction of that move that's going on, we could start to take those highs out. That was resistance through there. And remember what we just talked about? It could be tied to the magnitude of the move. Because if prices coil for a period of time, like coil down through here, they get into a tight range. A lot of times how the market works is then you get, following that compression, you get an expansion. We're seeing that again right here. What makes this interesting is you are on the verge of taking out a high. Can you get that or not? It's changing right here. I'm going to pull this back and just see what we've got on a larger term scale and see if there's anything there to look. Look at that. That's a week. That's a monthly. I thought I had a weekly. That's a monthly potential breakout. Look at the closing prices right there. Interesting. Expansion of that vol. Vol expansion is happening right at this top. Resistance, potential breakdown, or will we hold it? Because right now we're above it. And when you're above that level, that could mean support. Support right there. You're above it, right? That's a long, and that's all the way back at 21, 22. That's sort of a V-shaped bottom, and yeah, depends on how I'm looking at it. Let's go back into that weekly because I want to actually see this a little bit better. Here's the weekly. Well, it sort of looks like an inverted pattern over here. Shoulder, couple of them. Head, couple shoulders over here. Do you see it? Yeah, perhaps it could take out that level. That's very, very interesting to see. But on a monthly basis, it's a closing high. Gives you time to look into it, you know, whatever company it might be. Let's go back and hit some more of these. It's going to take just a second. Oh, see how fast it reloads the second go around. Okay, what do we have in here? So T-Mobile, cool. It's in the S&P 500 as well. It's currently showing up just like it did in the NASDAQ 100. We've got some of these others in here. KR, okay, okay, so Kroger, think about a consumer staple. These have been in for 3. Let's take a look at CAH. What do we have on that? And then we'll look at Kroger as well. Notice what I'm doing. I'm actually thinking about different sectors that could be moving here. CAH. We were in for a long period of time and we just broke out of it. So, will we get a breakout in a rally? That right there looks like a potential extended flag pattern. You just broke out. Will we start to see more expansion? A lot of times on these breakouts, I'm not saying it's going to be this time, but a lot of times you'll come back down, and what you'll do is you'll rest on a prior high right there. Very similar to DTE we were just looking at, right? This is Cardinal Health. So this is healthcare. So we saw there was a bunch of energy in there. There were definitely some defensive areas. Staples. We want to look at Kroger. Cardinal Health is definitely in that area. We saw some other healthcares, Amgen, Biogen, in the squeeze right now, but giving us a little bit more timely information 3 days ago. So as long as you're running this at least every 3 days, you should be able to. You shouldn't miss anything. Okay. There is one additional condition I had that I ran into, which extended me out another week into finally talking about that this week, is that sometimes you can get an expansion and then go right back into a contraction or a compression of volatility, right? This script, as it stands right now, which is not guaranteed for timeliness or accuracy, it makes sure that you didn't automatically pop back into another compression. You've already begun the expansion. But that could be, a potential breakout right there with the possibility of a magnitude lift because of that compression. Notice we're getting some of these interesting price patterns in there. What is the portion of a flag if not a compression? To get a flag by itself, we have to have a strong upward move, which is volatility expansion, and then the flag itself pulls back less than the original pull of the move. So by definition, folks, it's a compression. This actually helps to spot it. That's a long one too. But was it not a long flag? It nailed that flag perfectly. I mean, well, we can call it a flag now. We don't know if it'll hit its target, but a flag is confirmed when you start to break above the high of that move, and you say, well, that's a flag. So at least that's how a lot of traders will define it. KR, right there. KR. Okay. I actually was looking at this one. I had no idea it would pull it up, but you could see we went in and out and in and out again, but we're back into moving out of a compression. Notice anything interesting with the trend? What's it noted for? I see JB do this all the time in his classes, and he goes something like this. Let me see if I do this right, Boyd. Is this about right? Something like this. That's a lot of flag patterns. Is it finding the compression area? Boom, right there. Boom. And boom again right there. Okay. It is showing that, and you're seeing that compression come down. So, will we have another flag? That's the question, but it's acting like a flag, and it's showing that it could be coiling and possibly ready to bounce up as well. Okay, ready for the conditions? Let's take a look at it. Okay, oh, there was a question about the yield. This was display? Sure. Let me do this as well. This is the yield display. Here, 1 second. All scripts are not guaranteed for timeliness or accuracy, but this just simply takes that yield and data. As long as we're getting the data correct, it should work for you there, folks. There's your yield. So that's the dividend yield display. And here is the squeeze reloaded. Okay, let's pull it up. Let's look at some of these conditions. I'll share this with you, though, right now into the chat. So here is... and it's not guaranteed for timeliness or accuracy. Let me just post that in as well, just so you're all set on that. But like I said, the data is good. Then mathematically, it should be doing what we just talked about. But there you have it. All right. So a couple of quick points over here. This is just building on the last script that we had, a big chunk of it. A big chunk of it is. We've got over here the standard that we've been using for the Bollinger Band. the standard for the Keltner channel, which is a 1.5 ATR. We have that data here. And actually, this was able to be grabbed right from the Thinkorswim sort of inventory because we've got the indicator there, right? We can use that same information. But look at these other, and I put some notes in here for you to kind of take a look at on the squeeze itself, just some specific little notes, as you can see. But here is the TTM squeeze itself. I've got the number of bars, and by the way, that's just a description that we've discussed before, that the upper Bollinger Band is less than the upper Keltner channel, lower Bollinger Band is greater than the lower Keltner channel. That's the squeeze, and that is how we define it. Now, remember I said there has to be the number of bars, excuse me, the number of bars. The squeeze has been active, okay? Have some of that data here. Ooh, I know we're a little bit low on time here, but I wanted to highlight this for you so you can see it anyways. And so I put in some of the coding so you can see it. And then we can, in fact, next week we're going to take a look at, we could talk about these codes, and I have some additional codes to share with you next week. Hopefully we'll work on that tweezer top that I've been discussing. Folks, if you found this useful and informative, helpful, definitely just give us a like. It helps me understand that, it was useful for you. You found it informative and helpful. Again, this is just meant, it's kind of like the part 2 of it, the reloaded version, where you're seeing it. Let's see how it's happening after the fact. Let's see because this kind of gives us a little bit more information, right? It says, hey, volatility is expanding. What does that look like with the moving averages that you focus in on? Is it breaking above a short period 10 moving average? Is it breaking above a longer term moving average? Is there a price pattern associated with it? There's a lot that it can give you. So I think you might have fun with this over the weekend. Okay. But just wanted to highlight and note that, if you like this, be sure and smash that like button. It really lets me know it's informative for you. And then while you're at it, bottom right hand corner of the screen, just smash that subscribe button. Love to have you on board there as well. It is really, really helpful, though. Lets me know where you guys stand. But let's see. I think we're all set here. And gosh, it's been good being with you guys. Look forward to this class each and every week. Sometimes these scripts take me a little bit longer than expected because a lot of conditions that you have to come up with. But yeah, we could do that. And again, any topic requests, throw those into the chat box as well. By the way, there is a survey. Oh, thank you, Boyd. Yeah, there's a survey right there in this chat as well. I think there's only a couple questions in there, but anything you found helpful, useful, whatever it is, I take a look at that. So too does my manager. All right, be sure to like and subscribe, folks. And on that note, have a terrific weekend. Enjoy. See ya.